This video is on uh, a gap down, and it's a very, in some ways, a very classic example of a gap down. Uh, there are one pattern gaps and two pattern gaps, and by that I mean there is a large number of gaps that are in one specific identical pattern on the day before the gap. And in a two pattern gap, it's two patterns, both up or both down, that tell us the price is going to go in a particular way. The gap itself, let me switch over to the video or to the chart. The gap itself is a gap that has, well, let me say it this way. It's a gap that is from the perspective of what defines a downtrend. For example, higher lows would indicate a downtrend. We are one peak away from the top of the peak, and so we have, like, for example, when you look in the price chart right here, you see that we are in it's a BOC lower pattern. You could also say that it is a high M right peak lower pattern. It typically looks like a BOC lower pattern to me, but whichever way you want to say it, that's both would be basically correct. Oftentimes what we see is the green candle is above all the other candles. In this particular case, it is lower than 2 days ago, but higher than yesterday. The close is. And what we have here is, for example, if you look at the trend green and the trend red, the trend red is significantly lower than the trend green, and it is trend red is at 10 and trend green is at 18. Now, I was thinking that it would be a lot higher, the spread would be a lot greater than that, but it is not. So that may not be a factor inside of this, because oftentimes you can see these separations in other gaps like this, where the separation between trend red and trend green will be in the neighborhood of 12 to 18 points. That being said, if we look at the zip yellow, we're basically in a triple top going down. Actually, what we're in is a head and shoulders pattern, which I think everybody knows is a pattern that says price is going to go down. What's interesting about this pattern is that if you look at power yellow, it is in a head and shoulders pattern going up, or a triple top going up. And so in other videos you've possibly seen me discuss relationships between zip yellow and power yellow, and this is an example of another one, because you have divergent activity between those two lines that are a significant part of this gap. And in addition to this, we also have down here in the swing gray line, we have 2 days of low angle up, and you may have not heard me discuss that aspect of a situation before, but when you have 2 and sometimes 3 days of a straight low angle, either in this fashion or in the other way underneath zero going down, the reaction is a reversal. In this case, gray is going up, so it's going to reverse down. If it's underneath with two or three straight days like that, it will typically reverse and go back up. The pattern, the BOC lower pattern, actually occurs 12 times inside of this gap down. Again, if you've read or done any research on the rules, how we define rules for the 1 pattern and the 2 pattern, you would know that we try to look at having 12 to 20 of indicators in the 1 pattern category, or if there are 2 patterns, to have both patterns together be within, or both patterns together have 12 to 20 total indicators in the 2 patterns. And this just qualifies as a I mean, not that you could have a gap down with 10 indicators in one. It would technically be a 2 pattern gap. So it happens less than 12, but it's just how we classify it typically. We've kind of established the 1 pattern to have a minimum of 12. And usually the 1, not always, but usually the 1 patterns gap a little more than the 2 pattern gaps. But in both cases, we identify them before the gap, which is critical for anybody that trades gaps. I mean, there's a lot of people that say they trade gaps, and what they do is after it gaps, then they start trading it. We're not aware of anybody that has a system that can identify gaps like we can in the day trading Visual Basics system. So we are excited, let me tell you. But that being said, there's also, we basically categorize movements into 3 categories: 1 pattern, 2 pattern, and mixed patterns. All the rest of the patterns that you see inside of the pattern types, or the or I should say reversal pattern types, or the rules files, or the divergent files, they would fall in the mixed pattern category. And the more patterns, different types of patterns, like a bottom of cycle and a bottlenose, or just a variety of patterns. Keep in mind, in the pattern types, we have 24 patterns listed for patterns up and 24 patterns listed for patterns down. Some of them are like Zip Zion, where if it's lowest and going up, it's a continuation pattern for an uptrend. And then of course you have crossover patterns and highest and lowest patterns. So they're not all they're not all of the same type of pattern, is what I'm trying to say. The aspects of different types of divergence also is a factor in recognizing what might be divergent, or excuse me, what might be a gap down, or a gap up. And that divergence is a key element to that equation as well. What this pattern, to me, this is a very classic pattern. It falls within the parameters of our guidelines. It's very typical. This pattern also has one exception, or I don't want to say an exception, has it has about, I think, 6 or 7 indicators in a low angle down. And when we think of a low angle down, we think of a reversal back up. And so this is one of the unique patterns that we hardly ever see that has what we would first say is one pattern is going up and the other pattern is going down, but that's not really the case when you analyze what we have. And the other rule is also the greatest number of patterns rules. So like in this case we have 12 patterns in one direction. That direction would rule. But it's probably the only, I can't think of another way that we could have opposite or opposing patterns, even though they're not really opposite. Now let me explain. The 7 patterns are low angle down. And a low angle down can reverse and go back up, or it can continue and be a bottlenose. And so that's what it really is. And there's no other indication on the day before this gap that would say anything. Everything tells us it's going down. Triple tops are really, or if you call them head and shoulders, those are really powerful. I mean, those are candle patterns that tell us of a downtrend. But as you look at the candles, there's no way you can see the triple tops, but you can with these indicators. And so the pattern itself is really not an exception, but it's between the low angle down and the bottlenose, because the line is either going to go back up or it's going to continue down. And so in a bottlenose you got 3 lines down with the low angle in the middle, and with the low angle up you have with the low angle down that goes up, you have a price up scenario. But normally the low angle down that goes back up has a real long left side. It's like a post almost to it when you think of a trend red in a low angle down that reverses back up. That trend red might be 10 or 15 or 20 times longer than the low angle difference length. So and these do not have that. So you can, when you first look at it, the inexperienced eye is going to say there's 2 different patterns. This is the only way I've ever seen them that could be even closely or remotely stipulated as having one pattern in each direction, pointing in each direction. But they really don't, because the formation can go either way. And in this case, as we suspect, especially with everything up, I mean, we're on the peak. We're not down below under zero and climbing and going down. We're going up on a peak. So everything's telling us that we're going to have a gap down. So there are many other different gap examples inside the video. I'm sure you're aware of it. I found this one and couldn't believe it at first, because it was the first one I ever found, but I did need to clarify that so that you understand what appears to be something that's an exception in the rule book, but it's actually not. And believe me, it is great to be able to trade gaps before the gap in the system that we have. And while I'm on that, let me comment. It's the difficult part about. I mean, we know what the definition of a gap is, and occasionally they will react a little differently. We'll see a whole bunch of indicators like a 1 pattern or a 2 pattern, and then that pattern will, like this here, it might go 3-4 days in a downtrend rather than a 1 or 2 day significant gap. It's not exactly rocket science that we can tell if if a stock is going to gap. There's a lot of specifics that we know that will lead us to tell us that, but sometimes we might think it's a gap and it ends up being a 4-day downtrend. The price ends up the same, it just takes longer to get there. So we're very good at direction with the indicators. We have no problem in determining direction. But we sometimes miss it, and I'm sure you will miss a few until you get a handle on seeing what is ideal for the gaps. One of the things too, I'm going to go back here on the chart. You can see where the trend blue is. Trend blue right now is at 23. And when trend blue is really high like that, then there's a real good possibility that you can have a gap. Now it went up over here significantly, and trend blue is up into the 40 range right now. And boy, when you see that, you think, oh, that is fantastic. It's really going to drop. But it's also starting when trend green and orange, when power green and orange are climbing up and going above zero. And so that is a definite uptrend signal. A longer, what I'm trying to say is the trend, the power green and orange move slower than the trend trio. In other words, the trend trio is going to drop faster, whereas the power green and orange are going to climb higher. And the green and orange, if you know the formulas for these, when green and orange are under zero and going up, they are not as powerful as they are when green and orange are going up above zero. Same as in the down mode. When green and orange are above zero and going down, they're not as powerful as they are when they are under zero and going down. And I think that's true with the other short-term trend lines as well. But I'm definitely positive about the green and orange lines in that perspective. And so with the green and orange going up, after this 40 in the trend blue here, it's very indicative, and the results show that prices nudge up a little bit over the next 8 to 10 days. Until you have this this trend red spike up here, and then that ends it, and then at that point both zip yellow and power yellow are heading down at a much faster pace, and then you have this 4 or 5 red candle days in a row. So the indicators are really easy to understand. Sometimes there's difficulty in the movement of them, and the videos are the most effective way of understanding how these things operate in relation to the market forces and market pressures of a particular stock. So it's simply amazing.